Beautiful morning, my Spicy Life Global Family community. Today is the best day because we are here with Alex. Alex is a tax advisor from the United States helping clients investing smart in Costa Rica. Alex, welcome to Spicy Life Podcast where we talk about property, lifestyle, and smart investing in paradise. Today we are gonna go deep, well not deep in, but a more short about who you are, what you do, and how can you help our clients here in Costa Rica regarding to tax. Let us know who you are and what you do.
Yeah, for sure. No, and it's a pleasure to be on the podcast. I'm excited to talk to you about it and just, give a little overview on how U.S. taxes work in particular for U.S. people investing in real estate in Costa Rica, moving to Costa Rica, because it's not that complicated, but at the end of the day, you can save yourself a lot of money by doing it right on the front end, right? And that's a lot of what I do. But to give you a little background on me, I've been doing international tax work, mainly working with expats and people investing outside the U.S. since 2012. I have my own firm in the U.S., Mcgowintax LLC, and that's what we do. We help people. We help people file their tax returns that have international stuff going on, and we do advisory work to make sure they're not paying more taxes than they have to.
Thank you so much, Alex. Your information is so valuable for all our clients and just people that want to inform, because when we met you, I can remember how you came into us, but I think you sent me a text message, and then you tell us like who you were and what you do, and we were at that point with a client that he is actively doing business in the United States. Well, he's kind of retired, but he's a multi-million-dollar client, so he's doing business here. And when you brought all the information, we were like, oh my God, like, wow, like we need to put attention to Alex because we want to do things right, and we want to keep. A lot of the people think that because they come to Costa Rica, they don't need to follow up with U.S. taxes, but it is like you need to follow up, right? It's super important, especially if you're actively working in the United States, right?
Right. Yeah, and I'll say just like how I got involved in Costa Rica in particular, because now I do a lot of what I do is U.S. people investing or living in Costa Rica specifically, although this started probably 3 or 4 years ago. Before that, I work with Americans living and investing all over the world, but then I started working with a few people in Costa Rica, and I realized that a lot of, the type of investor in Costa Rica, a lot of times that's their first investment outside the U.S. And so maybe they have a CPA or an accountant in the U.S., and that person doesn't really know what to do once they change their system to where now they have this Costa Rican property or Costa Rican company. And that's not always the case. There's definitely like more sophisticated people with things all over, but a lot of times it's just some guy from Minnesota who's been working and he decides he wants to purchase the property in Costa Rica and spend time down there. Now all of a sudden they have this international thing going on, and either they put their head in the sand intentionally or unintentionally and make some mistakes, or their accountant doesn't know what to do. So I started working, and that's how I reached out to you. I was like, I need to get the word out, because there's really not many people doing what I do in Costa Rica specifically. So I honestly just started reaching out to realtors and attorneys and things just to get on podcasts like this, just to talk through some of the basics that can save people a lot of money and a lot of headache on the front end.
It's perfect. Alex, thank you so much for your valuable information. We're totally agree. It's correct. Thank you for bringing this kind of services to our audience. We think that is really important, especially when it comes to investing in Costa Rica. So, okay, we're going to make it simple. We're going to make and talk about 3 of the U.S. tax tips of investing in Costa Rica. I'm going to tell them, and maybe you can explain them to our audience. And the first one will be, okay, the importance of file the right forms and avoid penalty assessments.
Right. So generally, and you can vouch for this, but generally when you set up when you purchase a property in Costa Rica, whether it's going to be a rental property or a personal home, you're going to do that through a Costa Rican legal entity, so an SRL, a limitada, or maybe an SA. My advice to people is to set up the SRL or the limitada. The problem is that it's people in the US will say, oh, I'm setting up a Costa Rican LLC, which is true, but it's not treated the same way in the US as a US LLC. So you have to make an election to treat it as a flow through, and it's going to add a couple of forms to your US tax filing. That could be Form 8865, 5471, 8938, FBAR. I mean, you don't have to know exactly what these forms are. We don't have to go through them specifically, but know that they exist. Talk to your accountant about it. Each of those forms carries a $10,000 penalty in the US.
Wow.
Now, the truth is, I don't see those penalties. You would have to get audited, and a lot of time, and the IRS is at the moment they don't really have the capacity to audit many people. But there's no reason to have that penalty hanging over your head. So yeah, that's what I mean by file the right form. When you set up these Costa Rican companies, there's going to be additional filings on your U.S. tax returns. Make sure your accountant knows what they are and are putting them on your return.
So important, Alex. When you reached out to us, we had the CPA in States, and we didn't know until you shared the information, and we then did the research, and everything you say was absolutely true. And because we're moving like millions of dollars here, we were like, oh, okay, like right now we need to like get things because like you said, you put the head in the sand and you can go, but if then you can get big penalties for just and you can avoid them. It's the best thing. Like if you know what you're doing, this is where you come from.
Right. And I will just say, a lot of people, they get really good people like you helping them get things set up correctly in Costa Rica, and everything's right there. But you can't rely on your Costa Rican advisors to know the U.S. tax law. They're not going to claim to know the U.S. tax law, just like I don't claim to know the Costa Rican tax law. So you have to get it right on both sides, and ask the right questions.
Perfect. Alex, okay, second tip, preserve capital gain rate and loss carry forward. Talk a little bit about that.
Yeah, so if you set up a Costa Rican SRL to hold a property, the default treatment by the IRS is that it's going to be a foreign corporation. Wow. So now you have a foreign corporation that holds a property. If you later sell that property, there's a complicated set of rules, but essentially that's going to be ordinary income to you because it's held by a foreign corporation. So almost always, there's some exceptions, but almost always what we want to do is make an election to treat that Costa Rican company as a flow-through for U.S. tax purposes. And when I say flow-through, I mean like a partnership if it's treated, if it's has two owners, or a disregarded entity if it has one owner. And just to be clear, that election has no effect on Costa Rica. In Costa Rica, it's an FRL, that's the law. This is purely a figment of U.S. tax imagination. So we're making this election. If you sell the property later, you now it's your sale and you get capital gains treatment. That could be the difference between a 37% rate and a 20% tax rate on a sale, or even no gain at all, because there is, like if you live in the property in Costa Rica, you can get a principal residence exemption. So it's a very simple thing that could save you a lot of money down the road, and it's something hard to do later. You need to do it when you set it up. We can do it later too, but it's just a little harder.
Now, do you need to pay that 37% even if your investment if the property has already like 1 year after it, or?
Yeah. So the long-term capital gain rate, you have to hold it for at least a year.
At least a year.
Doesn't matter if it's held by a foreign corporation, because it falls under these anti-deferral rules, like subpart F. And where the income is the foreign corporations, and IRS basically makes you pick it up as ordinary income. So it's taxed the same way as wages.
Wow.
What's up when you've held it?
Yeah, Alex, this information is so valuable and so simple. Like, thank you for letting other people know, because like I say, Costa Rica real estate investing, it's serious, and all of these details are so important, and especially a person like you that is super knowledgeable, like all the power, and you can help others to have a more pura vida life.
So yeah, exactly.
Yes.
Yeah.
Okay. Tip number 3: apply real estate professional rules. What are those rules like? What can people do?
So the point of that is in the U.S., let's say you're setting up, you're going to rent your Costa Rican property out, and we've made this election to treat it as a flow through. So then it's just like in the U.S. if you held the property, the rental income and expenses are going to flow to your U.S. tax return. The general rule is if you have a net loss on your rental property, which a lot of times is the case when you factor in the depreciation expense and just the cost of renting things.
True, that's true.
So if you're going to have a net loss, the general rule is it falls under this passive activity limitation. So you can't take that loss and reduce your ordinary income, like wage income with that loss. But if you have, say you're retired or you have a spouse that doesn't work, you can use these real estate professional rules. You just have to document 750 hours a year doing something on the property, and I help a lot of people document that. It's not as hard to get there as it sounds. But then now you're in this real estate professional role, and that's purely a tax word. It's not like an actual professional license or anything like that. You just have to work a lot on your rental property, and then you can take that loss and offset other income, so retirement income, wage income. So it can be really valuable.
Wow.
Not only are you getting income from the rental property, and maybe you have a loss on the rental property, but you can get some value from that loss because it's offsetting other taxable income. So it's not a total loss, and there can be a benefit to the loss.
Perfect. So it's convert your passive rental income into active.
Exactly. Mm-hmm. Yeah, that's the move. But you really can't do it if you're employed. So both people are employed, because the rule is you have to prove you spend more time on the rental property than you do your employment, which is very hard to justify. But if you're not working, or if you have a spouse that's not working, it's a very valuable tax planning tool.
Perfect. Thank you so much, Alex. And look, I mean, like, this is only 3 U.S. tax tips for investors in Costa Rica, and we can go here more deep. Like I said, your information is so valuable. But this is super, super important, because investing in Costa Rica is not a game, and we want to make our clients, family, and audience to make it right. We're really, really, really happy with you, Alex, with your work. We love working with you. We recommend you and your company 100%. I know it's a hard work, but somebody needs to do the hard work to help others, and that's you on what you do, and that's me in what I do. So thank you so much. I want to ask you a question, like, how can people reach out to you, and what you recommend for all that people that it's doing the first step to investing in Costa Rica?
Yes, I think these 3 tips are like the basics that everybody needs to understand. And obviously you can go into more detail about what's deductible and vacation rules and things like that. But yeah, look out for, I'd say the number 1 tip is make sure you set up the SRL and not the SA if you can, because the SA you cannot make the election for that I mentioned.
Wow.
And you have 75 days to do it, and you can go retroactively. But if you purchase the property, get in touch with ask the question about this election to your accountant, or reach out to me, of course. You can find me at Mcgowintax.com. My email is alex@Mcgowintax.com. And I put a lot of stuff out there on social media, on YouTube, with more details about how these rules work. I put out a newsletter every week with going through client situations I run into, rental property rules. So yeah, check me out on YouTube, come up website, happy to help.
Alex, thank you so much. Your information, your energy, like I repeat, we appreciate all you do. We recommend you. So if you guys are looking into tax tips for investing in Costa Rica and all tax information, reach out to Alex. Alex, we're gonna finish this super fun. And we do love, positivity are contagious, but we're gonna do it love, positivity, and watch out with the taxman are contagious. Help Alex, keep it flowing. Thank you so much and have a beautiful day. Reach out to Alex if you are looking into big smart investments in Costa Rica. Thank you, Alex. Have a beautiful day.
All right, thanks a lot. I appreciate it.
You are the best.